Hi everyone, it's Mr. Thrive and Survive rebooted, and this will be the week update for silver, gold, the S&P 500 for the week starting April 5th, 2016. Guys, soon I will just be informing you where to click so you can go here. This is the one channel that's going to be hard for me to keep up with outside of the base site, the Edge of Truth. But I will be creating my own separate place on there that will just be for economics, and I hope to really expand what I'm doing here. You guys have any other things you want me to look at as far as major indices or currencies or something like that, let me know. Maybe I can slowly start incrementing them in as I get the site. Hopefully work done on the site behind me and things like that, so I can spend more time giving you guys some information you might be looking for. Let's get right into this. This is going to be a very short update this week, and maybe midweek or later I will have a much more extensive update to give you. Bear trap warning. This is for the S&P 500. We're looking at this on a daily basis right now. We have so many confluences right now stating that we are about to end and reverse that I have issued a bear trap warning. Again, nothing in this is to be taken as financial advice. This is just for information purposes only. Please seek out your own financial advisor before you invest in anything, always. So I drew on here something I normally do not do. There is also under here, we've had this channel formed since July of last year, and this channel has held until now, and we are about to bump up on it again, which on the S&P 500 would be about the 2080 to 2090 point, right in here. So we might have one more day to go before we're going to have stiff upper head resistance. We've got horizontal resistance at 2080 also. The 2080 area, you can see back here, this has been respected, and this area has been respected for year after year after year since it's been up this high. Or I should say every time it's hit it, month after month that it's hit it, since we've gotten this high on the S&P. Anyway, so going to the Elliott Wave count, we have what we believe is our Wave B highs, which happened back here in summer of last year, late May, early June, I believe. And since then, we've been working down. Has been the completion of a Wave B, of a Wave 4 ABC correction. And we're now looking at the start of Wave C. Since that has started, we've had Wave 1, 2. Wave 3 is in progress. We've had the first little mini wave in that Wave 3 process down. 1, 2, and then an extended third wave. 1, 2, 3, 4, and 5 down for our first minute 1. And since then, we've been looking for an ABC retracement up to our Wave 2. That should be completing, or it looks like it will be completing this week. However, remember, Wave 2s can retrace 100% of Wave 1s, and they can even go further if they happen to form what Wave B did, the major Wave B, which was a running flat. But I don't think that's our situation here whatsoever. This formed perfectly so far that we've been expecting. A, B, and C should come out in 5 waves. 1, 2, 3, 4, and 5. Looks like it's now completing. We are actually technically high enough. We have exceeded the Wave 3. Wave 5 could be complete now, or we could have one more thrust. When you break this down on a 4-hourly chart, you can definitely see a 1, 2, 3, 4, and 5 itself in the 5th wave. So all the conditions are met. It's just a matter of what day is going to shoot it down and what is the news that's going to do it. Sometimes these things start off slowly, and sometimes they start off like this. So we're just going to have to see. This is a Wave 3, and it's a second intermediary Wave 3. There'll be one more powerful Wave 3 than this to come in this first initial wave down, and then there will be a massive, probably sometime next year, Wave 3 down itself. We're not there yet, but this should be a pretty good Wave 3 down, comparable to this, if not more. In fact, comparable to this one here, if not more. In fact, it will be more than this. We will be below 1810 by the time this little intermediate Wave 3 is done of the first wave down. So that's it for the S&P 500 for this week. Again, a major bear trap warning. We are probably right here, right where this 2 is, over here. Okay. On our way down to a target of 500 eventually on the S&P 500. That's a far cry from 2072 where we are right now. We're now looking at silver on a daily chart. There has been no update here since my last chart that you've seen. However, of course, we've had some movement. We were expecting an ABC move down in a wave 2. I drew the retracement levels, and the last time we spoke, the silver hadn't actually reached a 32% retracement yet. And I told you that wave 2s generally are deeper than that. They tend to go to 50, 61.8%, or they could even go 100% of the move. I don't expect that in this right here, because this isn't usually the 100% or close to 100% of the move you get in the initial 1-2, which is exactly what we got here. The low right here was 1361 or roughly thereabout, and then the wave 2 came in at about 1375 roughly. So it almost retraced 100% of the price, and I'll bet you if I laid a Fibonacci on there, it would be a 78.6 or an 88.6 retracement. I'd bet almost my life on it. In any case, we have completed the first little mini 5 waves up for a little mini I or 1, and now we're expecting the ABC. A, B looks like it's forming in a triangle, and you can see we have now actually exceeded the 50% retracement. So we have gone, this is where you would expect to see at least. I don't know if we're going to continue down here. A, B, C, has this been enough? Generally A and C tend to be equal, or if anything, C could exceed A. So we still might be heading down a little bit more. 1458, you see something like that in silver, do not be surprised. However, the minimum conditions have now been met. We've actually crossed into the 200-day moving average. We hit that, it bounced off of it. Guys, if you're new to this, these, especially the 200-day and a few other things we'll talk about in the longer videos, price will respect this, absolutely. Look how this red line here, this is, I believe, the 20-day, yes, this is the 20-day moving average. Look how price respected that on the B wave bounce perfectly. As soon as it hit it, bounced off and went down. What held it on the bottom side was this 200-day moving average. Again, we had 50% support there on the Fibonacci retracement. I'll have videos where I explain this more if you don't understand that. But the bottom line here is with silver, we have had enough of the move now for the first small wave 3 to start, which should be more powerful than this first move up here. And also, as we have noted before, silver has lagged gold and has taken the gold to silver ratio well over 83, 84, 85 to 1, something like that. And silver should be greatly catching up. What the gold-silver ratio means is if it's 80 to 1, that means it takes 80 ounces of silver to buy 1 ounce of gold. We are looking for silver to possibly drop back down, let's say to 20 or 25 to 1 to gold. And if you start doing the math there, you can see why it would be possibly more advantageous to own silver than gold at the moment. But again, consult your own financial advisor before making any decision like that. Here is gold on a daily basis as well. We noted a definite completion of the wave 1, looking for an ABC move down. I actually believe it was gold the last time that hadn't reached the 32%. I believe silver actually had the last time we spoken. Gold still has not hit a 38.2% retracement, which tells me we might have one more move down. 38% would be 1195.70. It does not have to do this. It can turn around right now and head up. But we still might have one more day down. Or, you know, we could have a deeper retracement. I'm just saying that it would be a little unusual. It would be actually a very powerful sign if we were to move up here without even getting to the 38.2% retracement. There is another level around 25 to 27%, which very powerful markets will retrace to. Sometimes and not even get to the 38.2% retracement. but we're just going to have to see how this plays out. So I'm not quite there yet with gold ready to turn around, but it will be very soon. Again, look at this. This line right here was respected. This is the 50-day moving average. And look how much gold has climbed above its 200-day moving average right now. It also has its 20-day moving average above the day moving average is above the 20, and it is above the 200. This is a very bullish sign. In fact, if we get the 20 to flip on top of the 50, we're all the way there with a bullish sign. Where we are here is still roughly around this circle area in the big overall scheme of things. I'm sorry, that is, yeah, that's correct. We could either be here or we could still be here working up. Again, that's for the longer videos. I'll cover that when I do the longer videos. So, because we have two possible counts, they're both bullish. It's just a matter of, are we bullish for about 3 years, or are we bullish for about 13 to 15 years? Big difference. So anyway, as of right now, I would suspect that unless the stock market drops for some sort of reason, like war news or something like that, that we would expect gold to not take off quite yet, but we'll see. So the most certain thing for this week to take out of it is, I think the S&P is on its last gasp, and of course all the price makers, all the perma bulls on CNBC, Bloomberg, and everywhere else, they've just been out there shooting their arrows into the sky, talking about how we're in the new bull market and the new highs that are coming, all kind of crazy numbers they've been shooting. Well, we're going to see who's right real soon. I believe we're about to turn to the downside. We shall see. Take care, guys. Hope you enjoy these updates, and we'll be back soon.